Hey guys, welcome back to Mark's Stock Review. Hope you're all doing well today. Today's video is going to be on Piedmont Lithium. It's had a huge run up, so let's see if it's a stock to buy. I'm going to start off by providing a brief overview of the company, and then I'm going to talk about the lithium demand and of course the big Tesla deal. I'll then provide some risk factors which everybody definitely should be made aware of, and then exactly how I would trade PLL. Also, please consider subscribing if you haven't done so already, if you find this video helpful. Also, please like the video and leave a comment. I would definitely appreciate it. That said, let's get into it. And full disclosure, I do not currently own shares of PLL at the time of this recording. My last trades include buying Skills through the SPAC Flying Eagle at a cost basis of $12.22. Okay, next, a quick overview. Piedmont Lithium is an emerging lithium chemicals company based out of Australia. They are in fact a tiny company with a market cap of only $130 million. Note that was prior to the Tesla deal. And their goal is to be a domestic supplier of battery-grade lithium hydroxide and other chemicals in the EV and battery storage markets in the US. Currently, they're focused on developing their 100% owned Piedmont Lithium project in North Carolina. But it's important to note that their mine in North Carolina is not yet operational. However, that's hopefully about to change. But before I get to the Tesla deal, I want you to get a sense of how important lithium is to the EV market and why it's in such high demand and low supply. Lithium happens to be a critical component of the EV infrastructure required for the batteries in the EV market. And right now, only about a third of current production goes to actual EVs. And it's thought that production may need to increase by, get this, tenfold just to meet the EV demand. And to make it even more challenging, China produces approximately 60% of the world's supply of rare earth minerals, and the United States only produces approximately 12%. And this would be all fine if we were getting along with China, but with the trade war possibly worsening, the supply of lithium could go down. And that would end up being good news for lithium companies based outside of China. Piedmont would be included because they're based out of Australia. And speaking of good news, on September 28th, early investors got great news. It was announced that Tesla reached an agreement with Piedmont for Piedmont to procure an intermediate product for manufacturing batteries. So this is one step closer for Tesla to be able to manufacture their own successful batteries, and 1/3 of Piedmont's overall production is going to end up going to Tesla. End result, share price more than doubles. So is it too late to get into this stock? Did we miss the boat? My opinion, no. However, there are some significant risks that we need to definitely discuss. The first one being that the Tesla deal is conditional on Piedmont's ability to deliver on or before July 2023, so the risk does lie with Piedmont. So from my point of view, long-term stockholders for Piedmont should keep a very close eye on the North Carolina mine progress and potential setbacks. Next, and less important in my opinion because it's more backward-looking, but it should be noted that the share price has doubled while the company is still losing money. But this does not reflect the Tesla deal. It also does not reflect any progress made in the North Carolina mine. So from my point of view, the share price will climb higher if progress continues. Next, I read an article by Melissa Key to get a sense of their management and their outlook. Arima, who's a member of the board, used words like ambitious and potentially. So in my opinion, that's a very cautious outlook. Next, we have Patrick Brindle, who's the VP of Project Management, who reminded investors that the project is going to take between $500 and $600 million. And next, he stated that they are still working on funding for the project, which I personally did not know prior to researching this company. And lastly, he just reminded the investors that the Tesla deal is an anchor to their customer base, and that just underpins their whole business. So how would I go about trading this stock? And as a reminder, I do not currently own shares, and I don't plan on trading at least for this week. Considering the share price is in a new price discovery period, I would probably put in a limit order of around $35 and only put in about 10% of the total amount of shares that I want to put into this stock. And then moving forward, I would probably wait until the daily trading range has been established. And because of the high volatility I expect, I would probably set my limit order just north of the low of the day and then spread out my transactions over several days or even a few weeks. And if I was going to swing trade this stock, I would never go lower than my cost basis. But if I was going to be a long-term investor, it wouldn't be as a concern. I would just try to spread out my trades over probably several weeks. And that's it for today, guys. I hope you found this video helpful. If you did, please consider subscribing. If you haven't already, let me know in the comments section below if you are trading this stock and how you're going about trading it. Hope you guys have a great rest of your day, and I'll talk to you soon. Take care.